Welcome to the morning live stream. What? Looks like my internet's down. What? What is this? Oh my god. What's going on here? Oh, I have the wrong remote. That's why. Duh. What a nub move. Let's go.
77 years ago today. You're now up to date, Carl. I'll send it back to you.
All right, thank you very much, Rahel. Shares in Netflix, one of the S&P gainers this morning after Bill Ackman revealed his firm acquired shares in the streaming service. Our Leslie Picker has more on that purchase.
Netflix up today.
Hey, Carl, yeah, forget Netflix and chill today. It's all about Netflix and Bill. Ackman taking a new stake in Netflix in his letter to his Pershing Square investors.
Buying the Netflix dip.
3.1 million shares. That's worth more than $1 billion at recent levels.
Yo, we got one person alive.
Back its year-to-date slide.
How's it going?
More than 41% through yesterday, but today shares up about 6.6%, at least right now. Ackman is well known as an activist rallying for change of beaten down companies. However, he hasn't run a proxy fight since he lost one with ADP 4 years ago, and the quieter approach has actually paid off in terms of performance. Based on conversations with sources close to the firm and the contents of the letter, it sounds like Ackman doesn't plan to use this stake to wield major changes at the company. In a tweet, he said, quote,
"What's up? Leave a comment."
Hastings and the remarkable company he and his team have
or at least smash the like button.
that the market has presented us with this
Thank you for joining the live.
Clearly somewhat of a value play here. Ackman saying, quote, he's all in on streaming and began analyzing Netflix in connection with his SPAC deal to acquire a minority stake in Universal Music Group. Remember that? The move ultimately was abandoned. Morgan.
All right, Leslie Picker, thank you. As we head to break, we're watching shares of another earnings mover this morning, and that is Northrop Grumman, which is down about 4.5% right now after profit beat expectations, but sales missed amid ongoing supply chain and labor market challenges. I think it was actually something CEO Kathy Warden.
Right, we don't watch ads here.
Heading into this year, when I spoke with her back in early December,
we're gonna fast forward it. No ads. There we go.
You got Schlumberger, Halliburton, Marathon Oil. Remember, oil is a proxy for growth. It's also a proxy for inflation as well. So that's something you want to keep an eye on here. So in terms of where we are, I call this sort of the hope rally today. We have a very fragile stalemate with the market right now. The market's pricing in very aggressive rate hikes, but bulls want some evidence that inflation is peaking. We don't have that yet. We don't have the data to support that kind of idea. So it's very murky. And you can see this looking at the earnings situation. Supply chain inflation story is all over the place in the earnings commentary. Dow Inc. says pricing was up 39%. That's an amazing number. Their profit doubled. So they're a winner here. Whirlpool had higher prices, but they said it was completely offset by $500 million in inflation costs. McCormick said the same thing. Higher inflation, partially offset by pricing. Then you have these component delays. Lam Research talking about component delays, revenues missing, their guidance was below consensus. You see the whole commentary is all
What's
over
up? Welcome to the live stream.
Inflation and supply chain problems.
Leave a comment or smash the like button.
Situation's a little murky. Take a look at the trends here. We've had beats for the S&P 500. A quarter's reported, but it's been much more modest than prior quarters. Earnings growth, the increases in earnings estimates, basically flatlined right now, and the outlook is a lot more murky from the corporations. Now, there's only a quarter of the way through, so we don't have a complete picture yet, but you get the idea. It's not quite clear what's going on right now. That's why the market's in such a tizzy. Just for the S&P 500, remember, we haven't had an up day in about 2 weeks. So at this point, Carl, I think everybody's just looking for a little stability and a little clearer picture on what the inflation outlook is, and that's why we're going to very carefully watch every single earnings report and their commentary on where they are in the supply chain and inflation story. There you go. Just looking to try to find and stabilize the S&P 500 will be a victory for the bulls. Carl, back to you.
Bob, thanks. Bob Pisani. Continue to watch Tesla this morning. The stock is sinking after being on the top of the bottom line.
I'm buying the Tesla dip.
Monday's 851 and matching those October lows.
Tesla's a buy.
A lot more on the quarter. Hey, Phil.
Hey, Carl, not a lot of enthusiasm for shares of Tesla from Tesla bulls, in part because well, they really don't have something fresh and tangible from the conference call to look forward to, certainly not in the reference of new models. Here's Elon Musk talking about what they're planning for 2022.
Be introducing new vehicle models this year would not make any sense, because we will still be parts constrained.
That is a smart and rational answer given the situation in the supply chain right now, but that's not what many people wanted to hear. What do the analysts think? Morgan Stanley's Adam Jonas. Nothing truly narrative changing for Tesla bulls here. Meanwhile, Tony Sacconaghi at Bernstein says strong results, but no work on a $25,000 car and seemingly struggling with Cybertruck affordability. Finally, there's Brian Johnson at Barclays. He wrote, "We are concerned about the lack of a physical product pipeline." As you take a look at shares of Tesla, do not mistake Musk's comments to mean that there will not be an increase in deliveries. At least that's not what they're expecting. In fact, he says they will be comfortably above 50% in terms of delivery growth this year. Just for a point of reference, Morgan, the expectation on the street is that Tesla will deliver about 1.48 million vehicles this year. Remember, they did, I think, what, 936, 940 last year. So that's the expectation that is out there. But we will not get a new model. We won't see the Cybertruck this year. And I think that's the reason a lot of bulls, they get the juice from those announcements, and they're just not seeing that right now.
All right, Phil LeBeau, thank you. Shares of Tesla are down about 7% right now. After the break, we'll check in with Levi's CEO Chip Bird.
If you own Tesla stock, ouch. But I'm buying the dip.
Reminder, check out my new podcast, Manifest
I believe in
Space,
Tesla.
everything from the billionaire space race to which stocks in the group are set to soar. You can.
All right, we don't watch commercials here. All right, give us some good information, CNBC.
Now, and then the last thing is during the pandemic, people's waist sizes changed, and that gives them a reason to go update their wardrobe. So that combined with the new denim,
Boring.
you know, we've got some real serious headwinds.
All right, let's be honest. Who wants to watch the Levi CEO? Not me. Let's see if we get someone else. No one cares about jeans. Yeah, I think this is a bust. Let's see if they talk about anything else. No.
But no, when something like this will happen.
Oh my gosh. Here we go. Hopefully we got something good.
They're reporting better than expected results thanks to a strong investment performance as well as record cash inflows. Shares are up 7% and they're up 83%. Wow, over the past year. We're going to take a quick break.
Another commercial.
Holy.
So many commercial guys. All right, let's skip this. See what they're talking about here.
Well below that now. Certainly going to be a subject for Tech Check, which starts now.
There we go. We got Tech Check.
Good Thursday morning. Welcome to Tech Check. I'm Carl Catanilla with John Ford and Deirdre Bosa. Today, the chips get hit. We're going to break down some key results across the sector before
Intel down.
Intel's CEO, Pat Gelsinger. Then deja vu all over again. The NASDAQ rallying after just barely recouping yesterday's losses. A breakdown of the latest action as the Fed looks to possibly raise rates soon. And then finally, Netflix and Bill Ackman announcing a holding in the company, given the shares had been cut in half. Just what exactly could he push for? We're going to discuss, Dee.
All of that. First, though, it has been a morning for the chips, Intel, Lam Research, Samsung, all in the move after reporting results that were mixed across the industry. Intel's margins down last quarter as the company ramped up spending across a slew of new products and facilities. Sales were up 3% from a year earlier. That stock lower by nearly 7%. CEO Pat Gelsinger, who we will speak to in just a moment, noted that supply chain constraints continue to have an impact. Supply chain also a theme hurting Lam Research's stock this morning as they guide lower than expected expected due to, quote, worsened supply chain conditions. That stock is down 5%. John, we're in a chip shortage environment. We can't lose sight of that fact. And some semis are able to hike prices. I wonder, does Intel's results suggest that it cannot at a time when it's going to be spending billions and billions to get its foundry business off the ground?
Well, it's definitely difficult to hike prices when you don't have product leadership that hasn't been established. Pat Gelsinger would say yet. So that's an issue. But more than that, yes, there's the constraints and whatnot, but there's the capital spending, all the spending that comes with also launching new products and trying to get new hires in the door. So they've got that coming going on as well. But, we're talking about chips. We should mention AMD getting that Xilinx approval in China. That is significant. They've got a bit of restarting to do to try to get over the finish line now, but that looks like
I like AMD under $100. If it goes under $100, it's a good time to start buying AMD, the chip maker. All right, I'm going to restart this live. I'm going to go make myself some coffee. Thank you for watching.